Welcome. Thank you for joining us. Martin and Chelsea Matthews here, and we're talking about understanding financial cycles. This is really, really important. We're going to talk about two financial cycles that you need to be aware of and understand where you are in this financial cycle and how it affects you. So there's an economic financial cycle. Like if you look around, what is happening in the economy? Right now, interest rates are high. Real estate before was like crazy on fire. Prices were going up, up, up. Interest rates were really low. Then interest rates became really high. And it became harder to borrow money. And employers started laying off employees and slowing down the hiring process. And this is something that happens over and over and over. So it's really important to understand what financial cycle is the economy in, how does it affect you, and how can you put yourself in a financial position to take advantage of the opportunities. So for example, in 2008, the housing, foreclosure crisis, housing crisis, mortgage crisis.
The Great Recession, they call
it.
it.
A lot of people didn't know what happened. And what happened was a lot of people overextended themselves. It was really easy to get loans that people really didn't have business getting. And a lot of them were adjustable mortgages. So it was really low, they were only paying interest, and then after a period of time, they ballooned, and then their mortgage payments became so much higher and they couldn't afford it. And people started losing their homes. But not everybody missed out. Not everybody was destitute. There were people who were in a financial position to buy up those houses in foreclosure. They got really good deals on real estate. And so it's important to understand what cycle that things are in and how you can put yourself in a financial position to win and not to be wiped out. So when interest rates are high and it's hard to borrow money, you want to make sure you're in a strong financial position. You have reserves. Your credit is good in case you do need to borrow money. And maybe you have investors available to do creative things if you're looking at real estate. When real estate is really, really high, maybe that's not the time to buy your personal residential home or investment homes, or to at least be aware of where the market is at and what your ability for profits are. And then when real estate is really, really low, you want to be in a position to buy. You want capital to invest. Yeah. So it's really important to understand what is happening in the economy, how can you capitalize, and then the other piece of that is understanding where you personally are in your financial cycle.
Yeah, so look, a lot of times when you look at people on social media, especially, you'll see people are different economic cycles. And everywhere from the guy just starting out to multi-billionaire.
Everybody's doing great and they're billionaires.
Yeah, so you gotta be able to really understand where that person is in their economic cycle. Like a lot of times people ask billionaires for advice because the person is a billionaire. However, if you're just starting your business and that billionaire is in the billionaire cycle where they're expanding globally, their advice and their mindset at that point is different than the person just starting the business. You have to go back and look at what were they doing when they were starting the venture. Not one they've built this big business. They've got a whole team, a C-suite, meaning they got a CFO, a CEO, all these different things helping them grow and expand their business and thousands of employees. That's very different. It's like when you start asking somebody at that level, how do I hire my first employee? They're not really gonna be able to tell you because they're so far removed from that at that stage. So when you start looking at your own economic cycles, you have to look at, okay, where am I at in my economic cycle? Meaning, and the way you break some of this down is like you look at, well, am I under, like, look at your personal income, and I'm in the cycle of being under $100,000 a year of income. Am I between 100,000 and $250,000 of income? Am I between $250,000 and 500, 500 and $1 million, whatever it is? Same thing with a business. So whether you're an independent contractor, you're in sales, you're doing a business, you have to look at where you are and what are the things that you need in that particular stage. One common mistake people make is like, somebody messaged me the other day. We get this question a lot. I want to set up a trust, because we talk about trust and all that. We establish a trust when we got married, a family trust, all these different things. it was just, we would talk to people about setting up an estate plan, right? And then over the years, somehow having a trust became a status symbol. For us, it wasn't a damn status symbol. We had a minor son, we had assets, we had business. So we needed to structure our stuff so that if something happened to us, things would be set up properly for our son, our business things like that. That's the purpose of us setting up an estate plan. It wasn't because we're trying to create a status symbol by saying, oh, we have a trust. Now, nowadays, I see that as like the status symbol thing. People want to trust. And so one of my first questions I asked them is, what assets do you have? Because your trust is just a legal structure, it's a document. It doesn't own anything until you have assets for it to own, or you're going to gift it assets, right? So sometimes people will tell me, well, I don't have any assets. Even sometimes somebody told me that they set up a trust. I'm like, okay, what assets do you have to put into your trust? They go, we don't have any assets. So then why do you have a trust? You see, they're doing things out of sequence, out of their cycles. You got to have assets first before you start worrying about some sort of trust. If you have minor children, you can do that. If you got a life insurance policy, you can have your life insurance policy paid to your trust. So one example of this, anything you want to add to that point? One example of this would be like, we have a client who they wanted to invest in real estate. They've been a client of ours for years. And now they have other assets in place, but now they want to move into real estate investing. And they have built up some amount of money. So they got this money built up and they were like, hey, I want to take this money and put it towards real estate. And then we looked at their whole financial picture. So one of the things we're able to do, look at somebody's financial picture. Like, where are you really at in these 12 areas? So we looked at his whole financial picture so we can actually give them advice based on what's actually there. Not a guess, actual advice based on what's there. So when we looked at the whole scenario, I said, we shouldn't do the real estate thing right this second. Let's give it a few months because we're looking at this person's burn rate. Burn rate is like the amount of money they're burning through. So they have the ability to actually stack a lot more money than they were stacking, which will actually give them access to better real estate deals. Because sometimes you need certain amount of capital to get into certain deals. Like if you're trying to get into multifamily investing, right? Sometimes you need to be an accredited investor. You need to come with 6 figures of capital. So somebody will reach out to me and like, I got $5,000, I want to invest in real estate. Well, you're going to be very limited based on the amount of money you have. If you have no money, there's only certain things you can get into. If you have more capital, now you got access to more deals. So in this scenario, the client, we map out a game plan so that they can stack more. Because they're able to stack more of their money that they have, we're able to get them into better real estate asset classes. So we're able to get them into better real estate deals because now they have more capital to get into those deals. So if you're just getting started and you don't know like, hey, I want to get into real estate, understand that you could be limited based on the amount of capital you have. You could be limited based on the amount of expertise you have, and you could be limited based on the amount of time you have. So you have to look at, in my cycle, where am I at? Am I somebody who I have a lot of time, but not sufficient money? Or do I have a lot of capital set aside? Because we have clients, they'll have millions of dollars sitting in the bank. So that person has a lot of capital, but they don't have a lot of time. So once you start breaking it down and understand where in your cycle you are, then you can start finding the right things for you. And that comes from looking over your entire financial picture to determine, okay, I'm in this position, I want to get here, I need to start doing the things that get me to that next level, but recognize and confronting where you really are.
So if you would like help in identifying either of these types of financial cycles, whether you want to have a better understanding of what's going on in the economy, how you can put yourself in a stronger financial position. And really, in order to do that, then it starts with understanding what financial cycle you are in. Where are you at in all the areas of your financial house in life and business? Do you know what all the areas of your financial house in your life and your business are? And where are you at? Are they strong? Are they weak? What are the specific actions and steps that you need to take to be able to make your financial house unbreakable, unshakable? So no matter what happens in the economy, you can survive financially, but not just survive, you can thrive. You can create the life that you truly want, and you can know that you, your family, your business will continue on no matter what happens. So if you'd like help in those areas, feel free to reach us out feel free to reach out. And we're happy to help. You can check out some of the links provided, and we look forward to helping you.
All right, see you guys. Good job.